What's going on, everybody? Hey, my name's Justin. I'm with the Realkeeper Home Team at eXp Realty. And in today's video, I'm going to be breaking down and going over the market update report for the Jacksonville Beaches and Jacksonville Southside area for August of 2022. So part of the goal for this video is to give you an idea of what's going on with the market because there are a lot of changes, and also give you an idea of what to expect as we go into the rest of this year with the market. So this video will be going over some different graphs, some different information. So definitely a lot of information that if you're just looking to get an idea of what's happening with the market here in Jacksonville, or if you are looking to maybe buy or sell a home in these areas, the beaches in the South State area, it'll give you a good idea of what to expect as we go into the rest of this year. So relax, sit back, and stay tuned because when I come back, we will go over the data. All right, and we're back. So before we get started, please like and subscribe and hit the bell on this video so you get notified when we post more content like this moving forward. So as we begin to look over the numbers for the beaches and Southside for August of 2022, the first thing we're going to look at is the amount of homes that were on the market in August, as well as the amount of homes that got contracts or went pending in the month as well. So you can actually take a look here. You can see that we actually had 710 total homes hit the market in the month of August. Of those 710, 242 received contracts or went pending. This left us with a pending ratio of 34.1%. So you may ask yourself, what is this ratio? Why does it matter? What does it mean? So the pending ratio, again, it just outlines how many homes received contracts in relation to how many homes actually hit the market in any given month. And 34% is actually described as mildly active, which kind of continues a theme that we've seen in previous months. And it just means that we are still in a seller's market, although it's not the kind of seller's market that we had seen at the beginning of the year or last year. And so for you as a seller, what do you want out of this? You want the highest pending ratio possible, whereas you as a buyer, you probably want the lowest pending ratio possible, because the lower the ratio, that means that there more homes are still in the market in relation to ones getting contracts. The higher the ratio means that there's more homes under contract, and potentially less homes on the market, which just supply and demand means that there's going to be more competition for the ones that are still in the market. Now, when we take a closer look as well, and we look at what price range homes were in the market in, the majority of homes in the market and the majority of homes going under contract in August were in the $400,000 to $600,000 price point. Doesn't mean that homes at a lower price point or higher price point didn't hit the market, didn't go under contract. All it means is that the most homes that hit the market for a given price point for August was $400,000 to $600,000, and the most of under contract was $400,000 to $600,000. And as we continue to look on down, the median list price for all homes that hit the market in August for the beaches and Southside was actually $549,900. So it kind of continues that theme of the $400,000 to $600,000 range for the actives and pendings that we saw. So as we keep moving down, you'll see this first graph. This first graph outlines, again, what we kind of already discussed, but it outlines the amount of homes that were for sale in the month of August in relation to the amount of homes that went pending in the month of August. So whereas a couple months ago, you would actually see these two lines on the graph were actually a lot closer together, now we're starting to see some separation. So what the separation means is you actually, as a buyer, have more to choose from and less competition because of the fact that there's more homes and less contracts occurring across the board. For you as a seller, it doesn't mean that you're not getting a contract in your home, but it does mean that you have a little less competition from buyers. If anything, you may have some competition from your fellow sellers, and therefore you may have to do it more or allow the buyer to have some potential wins that they just weren't seeing earlier this year or last year. Now, when we look at the last 6 months, you'll actually see here that we had 1,336 contracts that did close in the last 6 months, and the median sold price was $445,000. And so when you look at it, you see $444,000 for sales, but then you see $549,000 for the list price for August. So what does this all mean? Well, even though we are seeing an increase in inventory, even though we are seeing a slight slowdown, slight leveling of the market, That's not stopping prices from increasing at a similar rate to what we've seen last year and earlier this year. Because if you're still one of the better homes out there, you're still going to get multiple offers potentially. You're still going to get your list price or above list price potentially. Whereas if you're in that 90% range, as far as your home, you still will get an offer, but you may have to come down a bit on price, and you may end up closer to that, a little bit lower than what you may have been expecting early on, but you still will get your home sold. And when you break it down, we did notice that in the 6 months, the majority of homes that did sell were in that $200,000 to $400,000 price range for this area. So a lot of that has to just do with the fact that this area is very desirable in Jacksonville. It's definitely, whether if it's for the schools, whether if it's because it's closer to the beaches, whether if it's because you're close to the St. John's Town Center, which is really kind of one of the big hubs for Duval County. Those areas just really make it desirable for a lot of people. And therefore, homes in that price range, which aren't as high as the $400,000 to $600,000 price range, they just tend to go quicker. They tend to go more often because people want to get into this area. And that's a great price point to get into the area at, and to then begin to build equity and potentially move up in the area price range wise in the future. Now, it is also supported by the graph below, so you can kind of see the relation between homes that did sell in relation to even some off-market properties that sold. Now, alternatively, in the month of August, we did see a total of 235 homes fail to sell. Well, actually, I guess in the last 6 months. And the reason for that, and there's a lot of reasons, but the reason for that could be because of price. We always have to think, as buyers, we always have to think, oh, it's all price. It's all price. Well, sometimes it's condition. Sometimes it's just you get a seller who doesn't necessarily need to sell, and they're just testing the market to see if they can get the price they want. Sometimes it's, the realtor, sometimes they maybe didn't market it adequately. So that does happen. I've seen homes with buyers of mine where you would never think you'd even want to walk into that house because it was marketed inadequate. And you walk in, you're like, wow, this is a beautiful house. And vice versa. You see sometimes some houses, and I get buyers who sometimes they say, hey, Justin, this is just not what the picture showed. Not necessarily in the best way possible. So things like that do occur. So sometimes when you see homes that don't sell, it's not always because of price. It's not always because of conditions. Sometimes it's because it was marketed inadequately. Sometimes you just have a seller who doesn't necessarily need to sell. They just want to sell or want to test the market. Alternatively, we also did see that there were 62 homes that did sell off market in the $400,000 to $600,000 price range. So these homes, with any area, you're going to have homes that do sell off market. Sometimes you have sellers who they just don't want to sell it traditionally, putting it on the market. Sometimes they want to handle it themselves as a FSBO. Sometimes they sell it to Open Door or companies similar to that. Sometimes they work with a realtor like myself, where we sometimes have buyers who are looking for deals. They are looking to find a home in a great neighborhood, and sometimes they come to us because they know that we can match them up with a seller, and vice versa, and not have to kind of go through the process of getting their home ready to put in the market, which sometimes for some people can be a stressful process. So things like that do occur. And so we did see, though, that there were a decent amount of off-market properties that did sell, specifically in that $400,000 to $600,000 price range off-market. Now, as we continue on to the next graph, this is going to outline the median days on market. So the median days on market for this area for August was actually about 42 days. Now, this is an increase from previous months, and a big reason for that is because of the slightly higher increase in inventory that's hitting the market. Now, we also are going into a bit of a time in the year where sometimes homes do start to sit in the market a little bit longer. We're no longer in that typical buying before school kind of season. And so a lot of people who did buy earlier in the summer who want to get in for the schools got in for the schools. And now it's people who are taking their time because they can and that they want to and whatnot. And so we are seeing a slightly higher days on market because of that. We also are seeing that in the past 6 months, the median sold price, like I mentioned, was $445,000, but the median days on market was actually 15 days on the market. So we are seeing an increase of days on market for homes recently compared to the last 6 months. That being said, and this is going to be a continuing theme as we go through the rest of this video, this market report, homes between $400,000 and $600,000, they were the quickest to sell over the last 6 months. A lot of times because they were just the majority of homes on the market. Sometimes when you have the majority, you're kind of gonna win out in the stats game. You're gonna have the most homes on the market, the most pendings on the market, the most solds, and the quickest to sell in the market, just because you have so much to pull from in relation to other price points. And obviously, as you go higher in price points, sometimes there is going to be a bit of a delay to sell because there's just less pool of buyers. So as we keep going down, the recent history does show though that the median sold price did increase in the last 30 days to 452,000. So it has increased about 7,000, but the days on market has actually doubled. So we're still at $46,000 price point. That's still going to be the common theme for this area, the beaches and south side. But the biggest takeaway from it is just in the span of 1 month, we have seen days on market for sold homes double. We have seen days on market for homes that are active increase as well. And so what this means is for you as a seller, you do obviously have to readjust your expectations because there's just a bit of a delay in getting buyers for your home. And for you as buyers, it means that you have a little more power, a little bit more ability to now negotiate with sellers because of the fact that you have more options. Also, you can see here the median list to sales ratio for the area was actually 99.9%. This is actually decreased from last month, which was 100.2%. This decrease has been a bit of a common theme for the last couple months, really since June. And a lot of the reason for this is with all the changes going on in the market, not even real estate, but just in life, people are starting to take a step back. People are starting to, reconsider, do I have to move? Do I want to move? Do I want to continue renting? No valid questions. Can I afford what I want? Will I be happy a year from now in this house if I have to pay this price? And there are questions that, if you're watching this and you're thinking about selling your house, there's questions you would have if you're in the position as well. They're all warranted questions. What that means for buyers and sellers, it does mean that prices are having to come down some because they just couldn't stay at the pace they were at the last year and a half due to higher rates, higher inflation, the cost of gas, the cost of food, the cost of just any typical expenses going up. And so with that being the case, obviously the list to sale ratio has come down some, whereas the absorption rate or the amount of months of inventory has actually increased to 2.1 in the last 6 months. So these two numbers, they do go hand in hand. As you have prices coming down, you also tend to have inventory going up. And for sellers, just keep in mind 2.1 is still very, very low. Equilibrium market, which is a market where it's not a buyer's market or seller's market, is at about 6 months of inventory. So to still be a 2.1 month of inventory market, which just means that if no new homes hit the market, we'd be out of homes to sell in 2.1 months. A little bit crazy to think, 66, 67 days and we're done. But that being said, it's still a very heavy seller's market. It's just not the seller's market that we had seen for the past year and a half prior to about June of this year. For you as buyers, it does also mean that can you negotiate more? Sure. But can you now start negotiating to where it's a buyer's market? No. At the end of the day, sellers can wait to get the offer that they want or close to that. So you have to obviously keep that in mind when putting an offer in, because there still are different variables you have to consider. And it's not per se a free-for-all. It's just, now you kind of have a seat at the table again, whereas last year and the beginning of this year, you really didn't have a seat at the table. As the joke was, buyers, they're at the kids' table while sellers would be at the adults' table. So you're kind of limited on what you could or couldn't do. And as we look at these two graphs here below, keep in mind that as inventory has increased and as the list to sale price has decreased, we actually have seen that prices have begun to come down a little bit in August in relation to July. September is not a full view. That's going to be a little bit more accurate as we go into October and we do September's market day report. So really what we want to focus on here is August. And as you can see here in August, we did see a bit of a decrease in median sold price where we were in that 445 range. Now we came down to about that 420 range for the median sale price across the board. In median days on market, we actually did see, as we already discussed, a slight increase from about 12 days to about 15, 16 days on the market. Lastly, we're going to look here at this market summary table, which kind of goes over the actives, the pendings, the off markets, and the solds that we've already kind of gone over, as well as the absorption rate, months of inventory. So we're actually going to start with the absorption rate, and I wanted to pinpoint this and point this out because although the numbers are still red across the board for most price points, which in this table, red tends to mean that price point tends to be more favorable to sellers. We do actually have some yellows begin to pop up, some oranges, some greens, even a indigo or turquoise, which just goes to show that as we continue to go on throughout the rest of this year, we are going to start to see some of these price points begin to favor buyers a little bit more than they were last year or beginning of this year. And again, favor buyers does not mean it's a buyer's market. It just means that we're getting closer to equilibrium. So as mentioned, as discussed, the most homes that were active in August were the $400,000-$600,000 price point. 2 to 400 did hold up, second place, and 6 to 8 was third at 74. Obviously, you can see here homes under 200,000. There weren't many, and those were all going to be your condos. That being said, homes at the lower price points, their list to sale ratios actually were higher than those at lower price points. Whereas at higher price points, ones at higher price points, you actually saw that their list ratio or list to sales ratio was much less. So whereas homes at the $200,000 to $400,000, they were pretty much selling for at or above asking. Homes in say the 2.2 to 2.4 million were actually selling about 98% of asking. So it may not seem like a big difference in the grand scheme of things. They're completely different price points, but it is good to note because as the higher price points tend to start to see these trends, it tends to trickle down to the lower price points, which is good to kind of take into account as if you're looking to buy or sell as you position yourself going to the end of this year and maybe even beginning of next year, 2023. Now, we also see here number of homes that did go under contract. Obviously, $400,000 to $600,000 price point had the most. As you can see here, the 2 to 4 was not far behind. And actually, the 2 to 4 had a higher pending ratio of 41%. So that was obviously some good stats to look at. And realistically, until you got to about 1.2 million, your pending ratio was about 30% or more. There was a little bit of a low amount from 6 to 800,000, but overall, this is just to kind of point out that this is an area where demand is going to be high for most price points until you get to about that $1.2 million price point or above. And so realistically, it's a great thing to kind of keep in mind if you're looking to buy that. Again, will you have competition? Yes. Is the competition of last year or earlier this year? No. Are you going to have to still give the seller a price close to what they're asking for? Depends on the house, but yes, typically. That being said, are you going to have to pay sellers closing costs? Not necessarily. Are you going to have to waive inspections? Not necessarily. Are you going to have to cover any sort of appraisal gaps? Not necessarily. There are some situations that could be the case if it's just that top 10% of homes. But if it's 90%, you do have the ability to not have to do those things. You also have the ability maybe even going a little bit less than asking price. Now, on the flip side, if you're a seller, you still will get top dollar for your home. Now, top dollar for your home may not be what you necessarily think in your mind that your home is worth. However, I think we can all agree that what your home is worth is a lot more than you expected a couple years ago when you bought it. So that being said, this is just the market update report for August of 2022 for the beaches in Southside area. If you have any additional questions, if there's anything that I didn't go over that you'd like to know more about, obviously I try to kind of give a little bit of detail about the amount of actives, pendings, the off-market homes, the solds, even going into the absorption rate. But if you have any questions that I can just help answer for these areas or others of Jacksonville, please feel free. I'm going to, at the bottom of this video, I'm going to be including a link to my Calendly. Please feel free to set up a time for us to meet virtually and potentially meet in person at some point as well. And I can help answer those questions, and I can help put you on the right path for what you're looking to do, whether if you're looking to buy or to sell here in Jacksonville or even other areas. And again, that's always the goal, is we want to be a great source for you to help you out. We don't, I mentioned on previous videos, like, our goal is not to just sell you a house. Our goal is to sell you a lifestyle. Our goal is that when we call you 6 months from now, a year from now, 2 years from now, or from when you buy, you're just happy as you were the day you did buy, the day you did go under contract, because that's our goal. It's not about just selling a house. It's about making sure that it's the right step for your next step. So, without further ado, this is the end of the video. Please stay tuned for future videos like this. Like I said, again, like and subscribe and hit the bell in this video. And until next time, I will see you guys later.